at ET now. All right, time to shift focus. 2019 has been a rather strong year in terms of Indian startups. We've raised almost $1.8 billion in 111 investments in the first quarter only of 2019, and that is exclusive data that we have compiled for ET Now shows that the period also saw 3 unicorns joining the best club, fintech and e-commerce companies, continuing to be the red hot sectors. Let's discuss that more with Avnish, Bajaj, and also joining me from Chennai is Mr. Varatharajan. Avnish, let me first come to you. Matrix has quadrupled its investment from just 2 announcements in January to March 2018 to 8 investments in the latest quarter. What are the factors that are really leading to these increased investments?
First of all, in announcements and deals are, as you well know, not necessarily happening at the same time. But let me answer the broader question you asked, which is, what is driving the increase in the investment pace? So absolutely there is an increase in the investment pace. I would say after 2016, so 17, 18 and year to date, each year will be more active for us than the prior year. I think it's just the market is deepening, and in fact one point which I think you and I had discussed earlier was, if you look back at 2018, obviously the Flipkart exit was a big exit. There have been other partial exits for investors. But overall, what you are seeing in my view is the maturation of the entrepreneurship cycle with the next gen of entrepreneurs coming out of a lot of these successful companies. So as far as we can see, I don't know if you guys will have access to company creation data, which is probably better than what we do. So I don't know if it is reflecting in the overall increase in company creation. But I can tell you that at the ground level, the quality of the deal flow has definitely gone up. And the minute the quality goes up, if you keep similar filters, obviously the quantity of deals you end up doing goes up. So I would say that is the market is deepening, and a lot of higher quality entrepreneurs are coming out, and that's, in my view, the biggest driver.
Right. Avnish, stay on with us. Let me also take it across to Varatharajan, who's joining us from Chennai. Varatharajan, what's your overall reading of the kind of investment activity that we've seen in VCs? It looks like it's been a rather strong start to the year.
Good evening, Ruchi. Yeah, I have to concur with, Avnish, that the numbers seem to stay the same, that we've seen about 111 investments worth about, $1.8 billion. And if you compare it with the immediate previous quarter, right, a similar number worth about $2.6 billion. And in fact, if you compare it with the same period in 2018, right, it's 80% more than the 1 billion that we saw. As far as the deal volume is concerned, right, we actually expect these numbers to go up, because of more deal announcement coming through. As far as the deal value is concerned, you may think that it's a shortfall from 2.6 billion to 1.8 billion. But if you just look at the last quarter, right, Swiggy and Bajaj alone just accounted for $1.7 billion. So that is a rare event there. So discounting that, it's been a very good quarter. And if people were expecting it to be a funding slowdown, that has not been the case.
Can you hear me? Right. In fact, let me take that point across with Avnish as well. Avnish, what's your own sense? Your portfolio has been very diverse in terms of fintech companies, e-commerce, consumer brands. Which sectors are you most likely to make your investments in now?
So, first comment I'll make is I was just listening to somebody, and I think they inadvertently said something that I think is very deep and instructive, and they said the best sectors are the ones that people are not invested in, which, if you think deeply about it, that's probably the case in venture capital, right? The stuff that is undiscovered yet. Now, what are we investing in? You know our philosophy. We have discussed this in the past. We are founders first. We try to form a view of the trends, and I'll talk to a couple of them. But generally, we follow where the founders take us, and we are, essentially following the founder's view of the markets. What have we seen in terms of trends? After the PDD, so if you look at e-commerce, I have consistently said that I believe e-commerce is underinvested in. I think after Snapdeal, ShopClues, Amazon, Flipkart, a lot of that big war of 2015-16, people got scared. And I think it is a sector that has been underinvested in. With the PDD IPO, I think we swung a little bit to the other extreme. But I think the answer is somewhere in between. So social commerce is an important sector. We believe with a computer in the hands of, a more powerful computer in the hands of every person, which is i.e. the mobile phone, more and more social commerce is going to take off, and we've been seeing a bunch of that.
Varatharajan.
E-commerce.
Right. Let me take that point across with Varatharajan. Fintech has registered as a top sector in the first quarter, despite overtaking the e-commerce companies. The word coming in from Avnish is that some of these e-commerce companies have not seen a lot of activity lately. What's your own sense? What are the sectors that investors are eyeing, and why is e-commerce not getting the kind of traction that it was getting at one point of time? The reason why fintech is really taking over that entire space?
Ruchi, if you see the previous year, right, investors were, moving back and forth. The first quarter was health tech, then there was a little bit of fintech investment, then there was a little bit of e-commerce investment. But overall, the year ended with e-commerce on top. But 2019, that has not been the case. Fintech has been an overwhelming favorite, getting about 20% of the investments in the first quarter compared to just 12% for e-commerce. So in terms of e-commerce, right, what we are seeing is we are yet to see much larger companies, arise from that space. And it's a bit too early. A lot of the e-commerce models that you're seeing now, in terms of consumer brands or social commerce, right, they've been in the last 2 years. So I think maybe you're seeing a much more time for these companies to grow up. And coming to just fintech, right, so looking at what investments have gone into fintech, its consumer lending continues to be the flavor. It received about 1/3 of the fintech investments. But having said that, we are also continuing to see very early interesting investments in, say, cryptocurrency or blockchain, or even something like, something like fractional property ownership. So, Axel made its first blockchain investment in a company called Skeps. Lightspeed has put in a second round into a company called Property Share. So overall, newer models are also rising in fintech. If you look at the third and fourth, right, we're looking at, interestingly, logistics tech is made it to the top 5, and you're seeing more of these trucking platform companies like Rivigo and Blackbuck, which are raised, growth investments. But interestingly, you're also seeing the push towards much more cleaner mobility. We've seen 2 very early investments in electric truck mobility. So you've seen, Bloomberg, a company called Euler Motors, or, Leo Capital invest in Infraframe Logistics. So, just like Ola, you're seeing in the trucking space also, companies move towards electric.